watching the IT space very closely. Now, when it comes to the IT sector valuations, they are at a bit of a crossroad. They're not at peak levels, but they're not even at the historical level. So there you have it. For TCS, currently trading at 25.5 times forward multiple. The peak was nearly 32 times, but the average over the last 3 years prior to COVID was about 21 times. Similarly, for Infosys as well. Current valuations, 21.5 times, a very sharp derating compared to the peak valuation multiple of 28 times. But again, the pre-COVID 3-year average return was about 17-18 times. So while valuations have corrected, they're still at a premium compared to history. Now let's tell you what brokerages expect from the IT pack. Now UBS says they do not foresee a meaningful downside from current levels for the IT pack, but they expect the sector to trade sideways. Kotak says the sector is stuck in a limbo. They believe the industry will face a tough first half calendar year before green shoots kick in only in the second half. Ambit says it's still not the time to turn constructive on the IT sector. Credit Suisse says it's time to be selective on the sector. They're only going with Infosys as the only outperform because the sector valuations are still expensive and there are still risks of earnings as well as valuation derating because growth is likely to moderate. CLSA is saying that last year the Indian IT underperformed massively. There is a possibility of a trend reversal, which basically means IT does well this time in this calendar year. But the upside is going to get capped because valuations still remain fairly expensive. So they're going to go with only a few select stocks. Infosys, because it's got a defensive portfolio, they've been aggressive on large deals. TCS, they're expecting margins to improve, and there is a potential of a buyback when it comes to TCS in Q1 of FY24. So that could provide that support for TCS. HCL Tech, they're saying there is a possibility that HCL Tech's margin guidance band next year will get revised higher. There will be improvement in margins, so that's why they're positive on HCL Tech. While LTIMindtree, that's another large player now post the merger, they're expecting healthy growth in LTIMindtree, and they're also saying the institutional holding in LTIMindtree is fairly low, and therefore that will provide some sort of a base. So that's the view. There is no one out there right now who's going out there and say buy IT.
Okay, no one yet saying, this is the time to be getting into IT. Reema, thanks a lot for taking us through, all of the valuations. But today is going to be a lot about TCS. So take us through what we should expect in terms of the earnings and also how does it